What's up, my fellow traders? Hope you all having an awesome weekend. It was a good week in regards with trades and in regards with prediction. So in the first part of the video, I'm going to talk about something really educational that will give you some good knowledge about the market, and I promise you, you will learn tons of knowledge. But if you want someone who want to skip the first part of the video, you can directly skip it to the analysis part where I'm going to do analysis of net gas, gold, silver and crude oil. I get this question a lot from traders that, Omar, do you look at fundamentals and how do you trade with fundamentals and technicals as well? As I mostly talk about technicals in my video, and I always say that I never want to confuse my analysis with fundamentals, because fundamentals are never consistent and it is always a guess and it always reacts after when the news releases. So this week I've taken a trade that was sent to my members as well. That was a technical signal with a fundamental signal, and it is not just I've sent an alert. It is something I've mentioned in my live session clearly that we are getting a fundamental interest rate decision, and if the signal was bearish, which it was, which I've already mentioned before the news releases and before we had a technical signal, if that happens, if you have a bearish fundamental signals, with that we have a bearish technical signal, I'm gonna take my trades, not blindly, not just with fundamental news events. So I'm going to show you that trade, I'm going to show you the clip when I've said to get prepared, so that you know what trading is all about, not just buying and selling randomly. You need to look at some factors, and once you learn the full system, doesn't mean you're going to start making money right away. It takes time, it takes experience, because you are taking care of a business, not just a video game or a gambling machine where you just gamble and wait for the 50-50 results. We need an edge, and that edge must play out in our favor maximum times and minimum against us. Now with that, I've started sending some market watch reports on my Telegram channel. As you can see right here, if you click on the Telegram link, is my description. I've been sending that now on a regular basis, and right here the market report was sent. If you click on it, it will take you directly to my website, and if you just click on the report right here, it will also give you access to free report which I send every other day on my Telegram channel. So keep an eye on my Telegram channel. If you have not joined, make sure you join that so that you get these good technical and fundamental analysis as well. And right here on gold, that was sent on 10th of October before the gold pushes up. I've clearly mentioned here on gold that gold has recently broken out above 50 and 20 EMA, above exponential moving average, signaling the price is gonna potentially push higher. And with that, I've clearly mentioned that the bullish engulfing pattern on the daily chart suggests that buyers have taken over the market, indicating the uptrend could continue. So if you're really interested, if you're really into the markets and you're really watching it closely, right here, if you are understanding this report, if you go and look here on daily time frame, here on gold, what do we have? A bullish engulfing pattern on daily. This was something I've clearly mentioned in my YouTube video as well, which I'm going to talk about in the analysis part. Now with that, I've mentioned that look at the ATR for the targets, and ATR is $31. That is a massive amount of move from here. The price pushed up $32. So that is a power of the ATR, that it gives you with the volatility of the market, and that is enough to hit your profit and wait for the price to get to this level. That was also mentioned in the report. Look for the targets according to the ATR. Key levels are right here. So if you're following me here, I'm going to keep on sending these reports for different instruments, for stock market as well, for crypto as well. So all of that will be sent. I've started the service free for you, just so that you guys can keep yourself updated with the fundamentals and technicals as well. So coming back here on AUD and ZD. Now I'm going to show you the clip from a live session where I've mentioned that we are getting interest rate decisions, and if we have that, I'm going to take my trades. Now I'm going to show you how I align myself with fundamental signal, with that a technical signal as well. Let me show you the clip from my last video, from a live session. And also some major news events are coming up, and not to forget, we have getting a New Zealand CPI interest rate decision. And there's a major news event. Interest rate decision can push the price massively, and I love to trade Asian market when there is an interest rate decision. Let me open up the calendar. Yeah, here. Interest rate decision for New Zealand, 2 a.m. Right here, forecast is they are going to decrease the interest rate decision. If they do that, then you're going to see a fall out of New Zealand. So I'm not going to just go for my trades just blindly. So if the price is forming sell signal and forecast is bearish as well, so I'll take a risk. So we need to take a risk. So that is what we need to look at here on Wednesday, 9th of October. Now right here, as you can see, the interest rate decision came up exactly how they forecasted. They forecasted it as they're going to decrease the interest rate decision, since the previous one was 5.25 and the forecast was decreasing the interest rate decision, means the bearish movement in New Zealand dollar. So we had an interest rate decision, but the forecast was something that was coming up in the future, right? And with that, I want to show you the trade, which is right here. 8th of October, we entered right here. Now, I knew that there's a forecast coming up, but we need to get prepared for this entry. Now we have a technical signal. I've clearly mentioned that if we have a bearish signal for New Zealand dollar, and with that we have a bearish signal for the New Zealand dollar fundamentally, which we had, the interest rate decision was forecasted as a bearish. So we had a clue that if there's a bearish fundamental decision, if the forecast is exactly how it says, then the price of New Zealand dollar is gonna push down, it's gonna get weaker. So that is exactly what we have done. We have sold New Zealand dollar and we have bought AUD with this technical signal that happens above 50 EMA. So we are trading, we are in an uptrend, or we are looking at bullish signal in an uptrend with a pullback. So after this good pullback, we had this bullish signal. I've entered with consideration that we are getting a bearish New Zealand signal as well. Here we had a technical bearish for New Zealand. Combining all that, I was confident to take this trade. With that, I've sent this trade alert to my members that we have now getting a signal for the buy for AUD and sell for New Zealand. Of course, if you're buying one currency, you are selling the other one. So we are selling the New Zealand dollar, looking at the weakening in the New Zealand dollar. And here we had a successful trade, keeping all the factors in the mind and how nicely it hit the profits. But I managed this trade till this recent high with my other brokers platform, because I trade with the other brokers. Just to show you guys, here on YouTube, I keep 1-to-1 so that you can learn first 1-to-1 before you move ahead for managing your risk. I always recommend beginners to trade 1-to-1 first. Now here on IC Markets, as you can see, my account is connected. One trade is right here running, and AUD NZD, as you can see, that nicely hit my take profit. I'm not sure why this arrows has gone. I might have changed some settings. I can't see the arrows from my previous trades as well. I need to change the setting, but it is something I've placed here on my broker's account, in my live account, which has been connected. So that is how I've taken this trade in combination of both fundamentals and technical signal. Not just that, we were waiting for the price to get to this level to take sell trades, or this level to buy trades. But in this trend, if we have a signal, we're going to enter of a buy trade. As we are in an uptrend, we are only looking for the buy trades by waiting for the price to get to this level. Every trend must end, but where does it end? It must end at the level of resistance. Now you can also manage this trade till here, from where you can start to look for the bearish trade. The mistake traders do, they get greedy and they just don't cut the profits. You need to know your exit points. I know my exit point was initially right here, looking at the fact it is the previous high, but the news have fueled the market up. But if I want to manage it, that could have been managed till this zone as well, which I've done multiple times. I'm shown in my videos as well. And talking about that, I want to show you one more trade where we had an entry condition at the level of support and where we have exit at the level of resistance. That is something I teach to my members, and in a live session, this is something I've talked about. Let me show you the clip from that as well. Euro AUD zone has been changed, so I'll be marking my zone a bit differently now. 1.5971 goes up to 1.6038. This will be an area for me to enter my buy trades for now. Right here. So at this point, we entered buy trade. That was clearly mentioned to my members in the live session. And I've mentioned that in the live session that it is an area till where I want to exit my trades. Now, after that, as you can see, clearly the price pushed up to the zone, which is right till here. And after that, the price forms what? Now we had a bearish signal, and it is not something we have taken blindly. Let me show you the report right here that was sent to my members. I've clearly said that the price is approaching the level of resistance, and once the price hit my level of resistance, I'm going to look for the counter trend trade. After we take the profits, we need to get out right here and we need to enter the next trade. Not taking your profit as risky as not placing your stop loss. I keep on repeating that, and as you can see, we had a bearish signal exactly how we planned. Now things won't gonna go exactly how you planned. Sometimes that is why we have stop loss. But here it has happened exactly how we planned. From here as well we bought, and here we had a sell signal from where the price nicely pushed down, hitting my 1.4 to 1 reward to risk ratio. Now these days I'm not very aggressive with my trades, but that's why I've entered this trade with a limit order from high to low. Right here 50% was my sell limit order. There my order was triggered. I could have entered right at the close as well with the market order. That's totally fine. But nowadays I'm not very aggressive with my trade. So that is why I waited for the price to come down, come up to my zone, and then I placed my trade and nicely hitting the profit. So that is how we need to look and analyze the market, not just by random decisions. And also the mistake you do: don't mark random lines and so many indicators on your charts. If you mark your line somewhere here, let's say you mark your line here, now you would be like, it is a level of resistance, price is going to push down from here, and you will get fearful to exit your trades here. And if you look back, if you see, yes, level of resistance, level of support. That is why I have rules to mark these zones, and it is something my students are learning in the course, and I have 6 lessons for that in the advanced section that I can't explain, and it's impossible to explain in one single video. But if you do that, then the chances of making mistake will increase. But for me, it was not my level of resistance. My level of resistance was right here till where I aim to manage my trade. Still from here we had a bearish signal, and as you can see from here price nicely pushed down, and it was sent to my members as well to look at these zones. So I hope that makes sense, how you take your trades, how you mark your zones, and it's very important to mark your zones as accurate as possible. If you are my priority member, then you receive these zones every week. If you are using your own strategy, if you're already profitable, if you're already a trader, then it's worth having my zones on your charts to look for your trades. As you know, that's why I show you these zones every week so that you get an extra confidence out of that. And my zones played out nicely most of the times. Now most of the zones for commodities, we are still waiting for the price to get to the zones to play out. So we are still waiting for that. But here with the crude oil, we have a zone that has been hit and triggered. Now for this one, I've clearly mentioned to my members that I will be looking at this level closely for the possible pullbacks, and once we have a pullback, I'm going to look for the buy trades only. Before that, we took an aggressive trade right here as the price was still not in my zone. So in this type of scenario, either I go for the pullback entry bullish or aggressive entry, which is my 50% retracement. My buy limit order, that was also clearly mentioned in my crude oil last video, and it nicely hit my 1.618 retracement. Now in the live session, I've clearly mentioned to my members that once the price hit 1.618 retracement, you need to exit your trades, because 1.618 retracement is a very good level of resistance in the Fibonacci level, and if it aligns with the previous levels, as you can see 1.618 retracement is aligning with them as well, and that is an extra confidence that 1.618 can react dramatically, and that is what has happened. Nicely pushed down. Now we were also prepared here in the report, if the price pushed down to the zone again, we'll be looking to enter the buy trades. Now as you can see, so first let me show you the clip from a live session where I've mentioned about 1.618 retracement so that we can connect the dots from there. We already entered crude oil here at 50%. If you have entered, take a look at 1.618 retracement is 78.22. This Fibonacci level is also a resistance level. Now if you go back and see, it is aligning with the resistance. You see how nicely the Fibonacci level of 1.618 retracement is aligning with the resistance. So that is what that was not mentioned in my video, but that is something I want to show you here as you're in a live session. It is an important level. So once the price hit 1.618 retracement, it will push down with a good pullback. It can either pull back to the previous green zone or above 50 EMA for the next push up. So we can see some good pullback short term. Awesome. So as you can see how nicely we were prepared here, and that is the benefit of taking live sessions so that we can look at the market current situation. If you are someone who are in my priority group, make sure you watch the live session. It will help you dramatically if you are really looking at the markets. Now from here, we were prepared for this zone that was sent to you as well, and crude oil zone was also mentioned in my YouTube videos. So you can't say that that has not been told to us. It is free for you as well for the crude oil, nat gas, gold and silver. That is something I keep on mentioning that. But here with my members only live session, it is a zone from where we are expecting a bounce as well. And as you can see how nicely the bullish candle forms, zone was not broken and price nicely pushed up from here and keep on pushing higher. And that is how we need to do the full analysis, not taking blind trades. It is something I'm going to cover in my analysis part of the video, but I want to show you how nicely the zone has been reacted. Now imagine when the price was pushing down right here. Now, just with the fear of missing out, let's say you start selling as well when the price was pushing down. Now, this would have hit your stop loss. That is why I always say, let the candles close. Once the candle is closed and forms a signal, only then we take our trades, not when the candle is forming something. It could be a fake out as well. That has happened lots of time. It could be a liquidity sweeps. That has happened. So that is how wait, and that is why I say discipline and patience is very important in trading, and a good example is right here and nicely hitting the targets. Then we took two more trades. One is EURJPY that has already pushed up around 100 pips, then push back down. That is what we call patience, and then push back up again. We are up for 82 pips. Do not enter this trade. I'm not sure what's going to happen. Most of my traders, they exit the trade right at this double top pattern, but I'm still in this trade, and let's see how it goes. It is my live running trade. If you see on IC market, you see this little point. I'm long here. It is something that was also sent to my members, as you can see on the screen. This was the entry candle right here. Now, if I would have entered with the Fibonacci levels, let's say I've entered at 50%. That is the benefit of entering in a less aggressive way. That would be my entry. And in this type of case, my take profit would have been hit. But that's totally fine. I've entered a little bit late, but still it's pushing up. And let's see how it goes. I've not exited looking at this big pullback, but as I've shown you my live running trade, it is something we call fear, and that is something we need to eliminate from our trading. And then we had one more trade, which is natural gas trade alert. I've sent that after a while. Let's see how it goes. I'm going to update you guys in my next video, but for now, I'm going to talk about that in the analysis part of the video as well. And then the copper report was sent last week, not this week, a week before that. And as you can see how nicely the price pushed down and pushing down to my next level of buying area. And it's something I'm going to give it to you free, as I'm just talking about in this weekend's video. The next level I'm looking for the possible buy trades is right down here. As you can see, 4.914 goes to 4.270 from where I've been looking for the possible trades. But it was a zone that was sent to the members that we are looking for the possible reaction and selling pressure, and how nicely it pushes back down. Now, if it pushes down to my level below, from here I'll be looking to enter my buy trades with conditions. Now, that is why I say it is not a signal group. I want you guys to look at these zones, look for the bearish condition. If you are someone who are already profitable, if you're someone who are already trading, then it is a group for you to look for these zones. Unlike the other signal providers who send you buy and sell signal blindly without knowing why are you buying or selling. I want you guys to look at these zones, not getting blind trades. Look at the zones, learn from it, maybe backtest it, and if you want to use these and implement that in your strategies, who knows, you might come up with a good strategy. You need to know how to mark these zones. So that is why you receive these zones every week for Forex, commodities, indices as well. Then we have Hong Kong index, the indices report that was sent to the members, that we'll be looking for the possible pullback to my zone below in green. Once we have a good push down, we're going to look for the possible buy trades only from this zone. And one more stock report I've sent to the members, which is something we are still waiting for the price to get to and form some sort of signal. And here, this one pushed back down all the way as predicted, that we're going to look at this level below. If we have a price to push down, we're going to look for the possible trades. And as you can see, the price is still pushing up, and from here the price pushed up around 1,000 points here on indices. That is a massive amount of move. Now, it is not a holy grail that you get this report and you start making money. That is why I want to hit you with the reality as well. And right here, this was something I've shown you in my last weekend's video, and it was a zone that was sent to the members which did not play out. Now, there's two conditions when I don't take my trades. Let's say the price comes down in my zone and forms no condition, I will not enter my trade. Means there is no buying pressure. But if there is a buying pressure, I go for it. But I still take a risk. We had a double bottom on daily on 1 hour time frame, and that did not play out. So you need to be very careful with the risk as well when you're taking your trades. But most of the time, I would say 85 to 90% of the times, my zone reacts nicely if we have conditions in my zone. Lastly, I want to show you silver and natural gas zones, how nicely that played out. Now, this was a zone report that was sent to the members 29th of last month, a week before this one. And for silver, we were already prepared for the price is going to likely to push down from this zone. As you can see, even though the gold was bullish throughout the last 2 weeks, we still managed to do a good predictions. The price nicely pushed down out of this zone, and this was an area anchor zone which was mentioned in my YouTube videos, and how nicely the price pushed back up from my anchor zone. But we were prepared for the price to come down and fall from this zone for the short term, and it nicely pushed down. And with that, we had natural gas as well. As you can see how nicely the natural gas prices also pushed down from the zones report I've sent to the members, and as you can see how nicely it is pushing down. I took this trade and that nicely hit my take profit. And there is very interesting situation coming up which I'm going to talk about in the next weekend's video, and I'm going to teach you how to trade trending market, get a scalp, and then if you want to manage your trades and how you can come out from the trades by grabbing a maximum profits and then enter another trades. That is something I'm going to leave for the next weekend's video. So let's wrap the first part of the video and let's start our analysis with nat gas, gold, silver, and crude oil. I've already mentioned copper zones in the first part of the video. Feel free to rewind and watch that part looking at the timestamp below in the timeline. So starting with natural gas. Now what do we have right here? So let me show you the clip from a last video so that we can understand the conditions and entries. If we have a good and strong break below 50 EMA, we can still see this little channel where the price has been rejecting, from where we can see another rejection. Otherwise, a possible retest of my zone below, which is right here, an anchor, a trend continuation bullish area. We are looking for the price to come down and form some sort of condition. Now we are still bearish short term till we see some sort of bullish pressure either here, or if we have broken below this anchor, then yes. For now, I'm not looking for buy trades. For now, I'm just looking for sell trades. If we have a break below with the momentum, then the pullback and pullback entry bearish. Still, as been mentioning for a couple of days, I'm still looking at the level below here on Owanda as well, which is 2.359 goes down to 2.264, from where I'll be looking to enter my buy trade with bullish engulfers. What do we have right here? And price is nicely pushing down, and right here my targets has been hit. At this point, we are just looking for some sort of pullback. Now if there is a pullback, doesn't mean the price is going to reverse on you. Doesn't mean I'm going to start buying. It is just going to be a pullback, just a normal process in a downtrend short term. Once we have that, I'm going to look for the bearish engulfing pattern and keep on taking shots. Nice one. So as you can see, the price nicely pushed down from here, and that was not just a random decision. It was something you were already prepared to take your trades. I got my entry, it was sent to you in the report, and it was mentioned in my YouTube videos as well. And right here, as you can see, the price forms a swing high bearish engulfer, and that hit my target. I've shown you the multiple videos where I was still in the trade, not getting fearful with the risk the price is going to push higher, because I was confident with my analysis. I've kept my same take profit. I've not moved that because I wanted to manage it till this recent anchor level. We had a pullbacks right here that did not scare me. Now when I've said that, wait for the price to bounce up from here. Looking at the NEMEX platform, I've said that we can get a possible bounce from this trend line, and that has happened. Now I've seen the panic in the traders. I've started getting messages that price is now pushing up, and why is that happened? Now I've clearly mentioned that I'll be just looking for a pullback. Doesn't mean you start buying here. Now most of you have bought here, did a little scalp. It is very risky if you have done that. It is not something I recommend. If they have done the little scalp from is bullish engulfer till 50 EMA somewhere, and they have sent me message that they've managed to take in these trades. Now I personally was waiting for the price to form a bearish engulfing pattern below 50 EMA. That was clearly mentioned, and that has happened. That was something I was expecting, and this is my entry condition, right? It is something I keep on mentioning in every single video. Without signals, we had not taken over trades. With that, we had a bearish entry condition, and if you look here, 1 ATR target has been hit. The way you can calculate the pullback, when I see these big candles, I'm not feeling comfortable to enter right with the market order. Right here with the Fibonacci tool, and as you can see, 786 retracement was the place I was looking for the pullback. Either 786 retracement or either 50% retracement. It is something I've already put a video in my course to enter your trades with the pullback, or you can also enter with the 50% retracement. So here I was comfortable to enter with the pullback, and one ATR has already pushed on, but I'm now expecting a price to push down further from here, and I'm still looking at this level below for the price to head to. Now, I won't be taking my buy trades unless the price breaks above 50 and 20 EMA, or if the price just pushed down to my zone from where I'll be looking to enter my buy trade. Now, you need to mark these zones on your charts, which is 2.505 goes to 2.610. It is my anchor level, anchor support. Now, once the price pushes down to my anchor support, only then I'll start to look for my buy trades with condition like bullish engulfers or double bottom entry pattern. Let's say if the price won't make it to my level and pushes up from here, then I will look for the double top pattern. But I will again look for my condition. Now if the price breaks below this low, I will again look for another retest, use this as an anchor bearish level and take my pullback entry bearish exactly like that, and keep on taking long shots until I see a buy condition. So only taking bearish trades until I'm bullish for natural gas. I'm not bullish, I'm bearish short term. That was clearly mentioned, and once we see a bullish condition, we are going to enter our trades either with a double bottom or with an aggressive entry, which is my bullish engulfing pattern at the zone. So only selling trades. Now I'm expecting a price to push down and keep on heading down. With the pullbacks, I'm only going to go short. If there's a dramatic news event, price just break above, and then I will look at the major double top pattern from this area. So keep an eye, only sell trades unless we get a buy conditions. Here on EURAUD, we have a bearish engulfing pattern. That is my entry condition. Now I'm expecting a price to push down to my zone below, which is right here, 2.361. That goes down to 2.267, from where I will looking to enter my buy trades with bullish engulfers at double bottom entry pattern. So keep an eye, only bearish trade. We have a sell signal here. Now while I was doing my edit on this video, I found this head and shoulder pattern as well, and as you can see, we had the left shoulder, we had the head of this pattern, and then we had a right shoulder here as well. Make it a valid head and shoulder pattern. Rejection from the termination zone here and rejection from the termination zone here. Now when I see this type of pattern, we can enter in two ways. First is a bearish engulfer, which we have in an aggressive way. Second is a break of a termination zone, which is down here. It is something I teach my students with the full rules. Now once we have broken and closed below, that is also a less aggressive entry, but it is an aggressive entry if you want to get a better reward to risk ratio. So that is a pattern I also found here on EURAUD platform. I'm now expecting a price to push lower from here. Not buying unless we are here or we have broken above 50 and 20 EMA. On NEMEX as well, we have a swing high bearish engulfing pattern, and the zone below 2.399 goes down to 2.386, an area from where I will looking to enter my buy trades only. Keep an eye, these are the conditions now I'll be looking at for the possible bounce. For now, once we have broken below this low, only pullback entry bearish from here. So only bearish trades for natural gas. Next up, we have gold. Has nicely pushed up, clearly mentioned in my last video, and also I've sent this report in my free Telegram channel. Once you click on the report, or you need to click on download report, and right here I've already mentioned that we have a bullish engulfing pattern on a daily time frame. Coming back here, if you look back on daily time frame and the ATR, according to the ATR, the target has been hit. For the long-term trader who look at the daily time frame or weekly candles, it is something that was for you. A good example of a bullish engulfing pattern must happen above 50 EMA. That is how my strategy work on all the time frame, but you need to look for the valid pattern, which I teach to my students as well, and I look for the very small details when I look for the valid bullish engulfers. Now we had a nice push up, and now I'm looking at this anchor resistance 2672 goes to 2685, till where I'm expecting a price to head to. And if you have a rejection here, like a bearish engulfer or a 382 candle right here in this zone, in that case, I'm going to go short. If we have that, if there is no condition, and let's say the price just break above this zone without forming any sort of condition, I will start to look for my pullback entry bullish and keep on taking longs. For now, I'm seeing a price to head to this level. We still have a room for the price to push up at least $16 till $28. Until we see a sell condition, a sell pressure, we are expecting a price to push higher. Once we have a bearish engulfer here or inverted hammers, I'm gonna go short. So keep an eye, still expecting a price to push up, and look for the sell condition and signals right at this gray zone, which I've just mentioned. Next up, we have silver. Silver bounced up nicely from my level. I've mentioned that we can see a nice bounce in my last video, and that has clearly happened. We are now in the level of resistance, but we are not taking any trades for silver. Now for me, preferably, I want to enter silver once we are broken above these highs. Once we are broken above these highs, I'm going to start to look for my pullback entry bullish till my next level of resistance. For now, in general, we can see a price to push up, and we can see a rejection back in this zone and see a possible pullbacks and then a continuation, because It is a level that has been tested once and twice, thrice, 4 times, and that is why we can expect a rejection from here again before the price pushes up. So gold, if the gold pushes up dramatically, it can still push the silver high as well. For me, for the conditions, I would like to see a break above these highs for the next buy trades. But in general, we are still bullish and expecting a price to push up and reject from here short term, and then a possible continuation. Lastly, we have crude oil. Nicely pushed up from the zone that was sent to my members as well. I was shown in the first part of the video. Feel free to check that out. For crude oil, I am now waiting for the price to break above this high. Now, we are still bullish. Either we're going to get a double bottom pattern. If we have a pullback, no need to get alarmed. I'll mark my rejection zone like this. Once I'm in my zone, I will look for the bullish engulfer like this, or a 382 candle or a green candle inside the zone. Once we have that, we will have a valid double bottom pattern, and I'm going to go long by keeping my stop loss below this wick, take profit 1-to-1 initially, and then manage my trades. So keep an eye. It is something I'll be looking at, a possible bounce from rejection box if we have a pullback. Let's say there is no pullback. In that case, I'm still expecting a price to push up, and I want to see a break above this high. Once we are broken above this high, then with the pullback, and I'm going to go long from here. Looking at the Middle East situation, I'm still expecting a price of crude oil to push high from here fundamentally, but for my condition, for my technical signals, either with a double bottom or with a break above this high, pullback entry bullish till we are in the next level of major resistance to take your reversal trades, which I'm going to mention in my upcoming videos. For now, let's look for buy signals with conditions only. So that's it for this week's weekend's video. I hope you got a value. If yes, and if you have made it to the end, you are a legend. Hit a like button for me, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade queen. I'll see you guys in the next video. Till then, take care.